Welcome everybody, and you can see from just today's earnings results that the markets are in pretty good shape. You can see all of these earnings today, Bank of America, Lockheed, Goldman Sachs, Johnson & Johnson, they are all above expectations. So hardly surprising that the markets leapt up and did well today. So if we now go to the dollar, it's all in the dollar. If this dollar stays elevated, then the markets, so the US is going to have a hard time to stay up. If you look at this chart here, and as I swap to the Dow, you can see that particularly this relationship in October last year, in 12 months from now, we started to really pull up just as the dollar started to roll over. If I just drop back to that. So look on the left-hand side of the screen, you see the dollar drops off and the Dow picks up. So that's why, to keep that relationship going, to sustain the Dow, this needs to pretty much roll over. Now we have started to come off of these resistance levels. So if we can stay down and stay under those levels and perhaps drift back to this year's lows, then I think the market can, particularly the US, can hold up. Okay, so, and if you look at the volatility index, that is staying fairly low. All right, so short to medium term, we have a market that is still viable. And you can see this recent dip in the early part of October has seen a push up. I wouldn't be at all surprised to see this come back into the 33k mark. But then if we do come back and pick up, then I think we can run into the year end. But typically you will have if you have a strong July and a weak August, that is in the normal part of the cycle, normal run of the things. And that's normally a precursor to a Christmas rally, a year-end rally. So at the moment, that is very much on the cards. So these markets are buyable. This is the FTSE. So the FTSE has been really struggling with this 7,700. Because that is a major pivot resistance from Feb 22, in fact, all of last year, and a lot of this year, many points this year, this 7,700 has been a major problem. So whichever way we close out of that in the coming day, particularly as the US earnings season is well and truly underway, that is the direction you can expect. So let's just flick across to gold. So gold had this huge push, gapped up on the Gaza issue, the Middle East breakout. Had a huge, humongous push up on Friday the 13th. So we, at the very least, we need to see 1900. We're 1925 at the moment. At some stage, we're going to backfill this gap, but gaps can stay open for a long time. For example, we gapped up on the 10th of March. And we didn't really close that until the 28th, until late September, not completely. So this could stay open for a long time. So in the meantime, I would try and get in on 1900 or lower. On the gold, the silver is picking up. That's a pullback at 22.25. And the oil's under the 20-day average, so we're hovering around the 85 mark, which is one of the key sort of mean averages in the oil. You can see how 84 is a key support. So, you know what, I think we might come and see this 2250, the breakup area. If we do and then close lower, then stay out of oil. If we come into that 82.50 and hold, then I can see it's going back to 92 and possibly heading for 100 or more. Okay, So we've got a really good support under there. If we come back and test that and hold that trend line, then I think the oil's got scope to really do well and finish well. So overall, the markets are okay, but it's fragile at this stage. We need that dollar to stay down. Let's just look at the miners, because obviously with that pop up in the gold, the gap up in the gold, the miners have done really well on that. So 13p on Pan-African has now seen that coming to 16p. Any pullback to 15 is very viable. That's last year's lows. And if all goes well, we should go and find the 20p high. All the other miners I would expect to be doing the same. So they're all this is Hochschild. I think that's a pullback at 80. Centamin is already in a sort of a support area. Any touch of 80p would be good on that one. And if we look at Griffin, no, I don't like Griffin. The others are doing all right. If we look at commodity related, if we look at Rio, I still say, I've been saying for months now, that we are in a commodity super cycle, and pullbacks in all these commodity related stocks, to me, are viable. That's Glencore, yeah, viable at 450, TP ICAP, 165, close above 170, that's a goer. Gem Diamonds must have been struggling. Yeah, stay out of Gem Diamonds, that is not good. Main group is here. I think any move into £2.215 is viable on Man Group, because if we close above 235, I think that can go back to this year's highs. So that's my main theme at the moment. Let's look at the oil stocks. PFC is struggling. That looks lower. That's horrible. Tullow's had a good run and is sitting on support. I like Tullow a lot. I would expect that to go back to 40. No guarantees, of course. GKP supported well. If we now let's look at the BP. Well, that's gone. That's quite some way out already. But if you look at the flip side of this, housing, Taylor Woodrow, that's finding support down there at 107. Decent volume today. So if that support holds, that could get back to 125 plus. Look at Persimmon. Okay, well, that's a good move today, right into that trend line resistance on Persimmon. Barrett Developments. Right, so that is a good close on reasonable volume. Let's look at, I'm going to finish by looking at some retailers. Let's look at Sainsbury's. That's in a support zone. EasyJet, so I'm classing airlines as wolf. That is not looking healthy at all. Look at the sell volume on that. I don't like EasyJet. I don't like the airlines anyway, so I would steer well clear of that. IAG, British Airways, attempting to hold up, and ABF, Primark, that's come off support at 1958. So at the moment, the message at the moment is we look as if we could have a good finish to the year, but it's fragile. I'm keeping a very close eye on the dollar to see if that does continue to slow and drop off. But I like energy and miners by far the best, and all those commodity related stocks. I'm very, very wary and keeping up arm's length of anything to do with the retail and the consumer. All right, hope that helps.